Good evening, ladies and gentlemen. Welcome to this DFCC Bank webinar, Geopolitics in Motion, Understanding the Middle Eastern Crisis and the Ripple Effects. We are hosting this special session in response to the current geopolitical climate and growing relevance of these developments to markets, businesses, and households in Sri Lanka. Our speaker this evening is Mr. Murtaza Jafferjee, CEO of JB Securities and Chair of Advocata Institute. He brings over 3 decades of experience within the capital market space and has contributed extensively to public policy discourse. He is also the past president of the CFA Society in Sri Lanka. Tonight's session goes beyond headlines to understand what is driving the Middle Eastern crisis, how it is impacting energy, trade, inflation, investor sentiment, and what the ripple effects could mean for Sri Lanka. I would like to extend my sincere gratitude to our clients, our staff members, and also all the other participants who have taken the time to dial into this call. I would like to request you to submit your questions through the webinar portal as the session progresses. We will aim to take as many questions as possible, time permitting. Thank you very much. Over to you, Mr. Murtaza.
Thank you, Siva. Thank you, everyone. Good evening. If I can start first with a pop quiz. How many people in today's session have traveled to Iran? You know, there is the hand thing. Just press on that. Nobody? Okay. How many people have ever traveled to Israel? Interesting. Nobody. How many people have traveled to the Gulf countries? Okay, nobody. Or maybe they are not pressing on the hand. And how many people have traveled to the United States? Okay, two. Not getting captured. Okay, maybe there's a technical thing. The hands are not coming through. Doesn't matter. It was just a pop quiz so that, you know, the other people listening in also have a sense of, you know, the audience, and you got to understand context, because television alone does not give you the real context of what's happening. So, you know, there is an extensive history to this conflict. You know, many of you would have heard about the hostage crisis, the Iranian hostage crisis. I don't know how many of you are aware that the hostages that were captured were all CIA. They were members of the CIA. Because for all of Asia, Tehran was the center of CIA operations. So when the Iranian government told the American embassy that the students are coming to take over the embassy, many of the diplomatic staff left. But the CIA operatives, they stayed behind because they were shredding. They were shredding the documents. And I remember in the 1980s, reading this Time magazine, where they got a whole bunch of school kids to paste back the shredded documents. And it was incriminating evidence to the Americans. Then you go back during the Mossadegh time, when, you know, after Second World War, there was a democratically elected government. And the British had a monopoly on the Iranian National Oil Company. So when decolonization was happening, Mossadegh, who was a popular elected prime minister, said he's going to nationalize because the agreement with the British was Iran would get 15% of the oil revenue and 85% of the oil revenue would go to the British. So Mossadegh said that this seems to be a very unfair deal, that most of the oil belongs to the Iranian people, that we have to renegotiate. So the British power was declining, and there was an Eisenhower administration at that time. The British got the CIA to create protest that were pro-government at that time. And they were supporting Mossadegh. This was all orchestrated, the workers. And then it created a lot of antipathy, chaos in the country. And then basically they kicked them all out. So that is why the CIA engineered a coup, and they put the current Shah's father on the throne. And then after a while, they deposed him and put the son, which was the Shah that had to leave. The one you hear on television is his son. He was an 18-year-old fighter pilot training in the United States when the revolution happened. There are so many intricacies of this conflict that the average person does not understand, and there's a long history. So when the hostages were captured, they were willing to release them, but there was an election coming up, and Jimmy Carter would have won if the hostages would have been released. So the opposite side, Ali Rafsanjani, who became the president, they went and paid him. It's very similar to something that happened in Sri Lanka. And they said, don't release the hostages until there's a change of government. So they extended the hostage crisis by 6 months. And these are things that are not known in the public domain. But there's a lot of complexities that during the Shah's time, basically Israel was on very good terms with Iran because Israel was conflicting with the Arabs. And the Arabs obviously did not like the Israelis because of what was happening in Palestine. But they were also very insecure about the Iranians, Persia, because they thought that there's going to be an Iranian empire. And that's why Israel and Iran were good friends, and they exchanged, and even the Israelis were helping the Iranians build a nuclear reactor. So, just to give you a bit of an introduction, that what sometimes you see as a layman on television is deeply complicated. Now, since the title of this session today is to better understand what the ramifications of Sri Lanka are, let's put it to you this way. This is an absolute perfect storm that is hitting Sri Lanka. And the sooner that this conflict ends, it is better. Because if it does not end in the next 1 or 2 weeks, etc., and it's a prolonged conflict, I'm afraid that the Sri Lankan economy is going to face a serious economic downturn. Now, as long as you allow the market system to operate, you are not going to get a crisis like 2022, right? The reason the crisis in 2022 happened is because we did not permit market prices to signal scarcity of resources. We intervened with the foreign exchange market. We intervened with interest rates. We intervened with fuel prices. And this intervention continued for over 1.5 years. You know, in the period where we were having power cuts, if you go back, that first quarter of 2022, electricity demand, diesel demand, petrol demand was off the charts. Most companies, adjusted for inflation, made record profits in that quarter because all the price signals were all distorted. No wonder we had shortages. And we had such a large crisis during that period because we didn't allow market prices to do their equilibrating effect. Now, in this particular crisis, we are permitting certain price adjustments to take place, but not to the extent that it should be taking. And therefore, if policymakers allow market prices to go through, we will certainly have an economic downturn. Don't forget that at the beginning of the year, the central bank's own forecast was for 4 to 5% economic growth, right? So what probably is going to happen is we are not going to have an economic contraction, but more like much lower rate of growth than was initially projected. And what I will show you is in the months of January and February, leading up to the end of February, the economy was doing extremely well. The economic momentum was extremely strong. So on that note, maybe I can pivot to my presentation. I'm presuming that everybody can see my presentation. So this is from the Economies magazine, and there's a cartographer who updates this regularly. So what this is showing you is the exchange battle damage that is happening. And the red is what the Iranians are throwing, and the blue is basically what the US and Israel are throwing. Now, you can see that the severity of the strikes have significantly reduced because they threw a lot in the initial days, and obviously with all the capacity being destroyed in Iran, basically they have less to throw. But they are being a little bit more selective how they are using it. Now, there's a massive fight going on in Lebanon, right? So this Lebanon is a border of Israel. Iran, the closest part of Iran, is over 1,000 kilometers away from Israel. Right? So the other side, most of the attacks are happening on the western side of Iran, which I will show you. The eastern side is much closer. And if you understand jet aircrafts, they cannot fly all the way into Iran and come back. So they are being refueled in the sky because the airspace of Syria and Iraq, etc., they don't have air defenses. So as you can see that the Israelis are the Iranians are regularly striking Israel, but they have this Iron Dome system that is not allowing most of the drones and ballistic missiles. So, if you understand the terminology, ballistic missiles is a rocket engine. It goes into the upper atmosphere and comes down. While a cruise missile is basically like a propeller aircraft, that it doesn't go out of the atmosphere, it flies like a plane. And the drone is like a slower ballistic missile. So these Shaheed drones that they have designed, which has a two-stroke motorcycle engine, 50 horsepower, I think 50 horsepower engine, it flies at about 180 kilometers an hour. And it has a range of about 2,000 kilometers because it's burning a very little bit of fuel. And when it then comes to explode, it dives down. And they have been continuously improving the design. So this kind of shows you the kind of battle damage that is happening. These are the areas in Iran that are getting hit. So you can see large amount is getting hit in Tehran and on the eastern coast. Now, if you know the geography of Iran, there are large deserts and it's one of the most urbanized countries. So the land area of Iran is 1.6 million square kilometers. The land area of Sri Lanka is 65,000 square kilometers. So Iran is about 27 times larger than Sri Lanka. This is very large. And if you fly from one side of Iran to the other side, it will take you like 2 hours in a plane. Now, this western side, basically, they are unable to get to this easily. And most of the Iranian military assets are not on this side. They're on this side because it's easier for them to also attack. Now, if you look at the geography, that look how close the Gulf is. So for them to lob missiles and ballistic missiles and drones at most of the Gulf countries, which are just where my mouse is doing, it's fairly a short distance. Now, this shows you where the Iranians, the red are where the Iranians are striking. And most of what they're striking are US bases. In almost all these countries, there are US bases. They have this Al Udeid base, which is in Qatar, this very, very large base. And I know some people, Sri Lankan origin, who have actually worked for the American military, who have been in that base. It's a very, very large base. So these strikes, and what the Iranians are doing is they're trying to damage their surveillance systems. This big radar was based in Qatar. They say this $1 billion radar. So that is the one that gives the early warning when cruise missiles and ballistic missiles are shot. And that is one of the reasons, because they have damaged it, that some of these missiles are getting through. This so-called Prince Sultan base is somewhere near Riyadh or somewhere here. And the reason that some of these things are going is they have decapitated some of these early warning systems. And the Iranians are getting intelligence and certain technical inputs from both the Russians and the Chinese. So this is the battle that is going on in Israel. And you can see in Lebanon that there's a massive battle going on in the south of Lebanon. Now you might be wondering, like, what connection does Lebanon have with Iran? Well, in Islam, there are two divisions in Islam. So there is the Sunni, which is the majority, and most of the Muslims in the world are in the subcontinent and Indonesia. The Arabs are a much smaller proportion of total Muslims in the world. So there was a division in Islam, the famous schism. So in the world's population, only about 15% are Shia. The Sunni means the teachings of the Prophet. It's about 85%. And Iran was never Shia. It was only in 1501, when the Safavid dynasty came, that they turned to Shia Islam. And one of the reasons I have also not been fully able to understand, but what I'm told is that the Arabs were quite dominant, Ottomans, during that time. But the Iranians were very proud of their civilization. They wanted to preserve Persian as a language. And that was one of the reasons where the Safavids changed to Shia Islam. And the knowledge of Shia Islam came from South Lebanon. They bought preachers from South Lebanon. They bought from Bahrain and a few other places because the Shias were being persecuted. And that there's a deep connection going back centuries. And the Shia population in Lebanon is in the south. So there is some kinship. And even this fellow, Ahmadinejad, who used to say all crazy things, he was trained in the Bekaa Valley, which is basically somewhere here. So there has been a long history of resistance against the whole Palestinian movement, etc. So what are the consequences of all this? First is, this chart shows you the world shipping routes and all the ships. The green is all the cargo ships, the container vessels, bulk carriers. The red are the tankers. Tankers are not only for oil. You can have chemical, you can have many others. I think you can have even for things like palm oil, etc., tankers. And this, I just took out the green, and this is what the world shipping looks like, tanker fleet. So there are a large number of time, and you can see that there's a large amount of tankers in the Arabian Sea. And this is a zoom map of what the traffic. This is a bit few days ago, but it has not changed materially. There is something called Marine Traffic 24, and you can get very detailed results. And if you have a more paid subscription, you can quite literally track over periods of time. So you can see large number of ships are stuck in the Persian Gulf. And these are all the tanker fleets on the right in that same area. So where my mouse is, this Bab al Mandal, which means gate of tears. because a lot of ships used to sink. Apparently, the currents are quite strong here. That is where that Babel means in Arabic gate of tears. So these Houthis, who are aligned with Iran, and they are also Shia, they basically can block this. So what is now happening is that there is a pipeline that is going across Saudi Arabia to this Yanbao port. So they have blocked about 20% of the world's oil, and that works out to about 17 or 18 million barrels, and about 7 million barrels can be filled here. So the fear is that if these Houthis, because they were blocking the Red Sea, if they start playing up, the 7 million barrels that is also coming from here cannot no longer come from here. It will have to go all the way around the Mediterranean and come from the bottom of Africa. So this is a zoom thing of the Persian Gulf. And this conflicted area is simply this, right? So this Kharg Island that they keep talking about is actually somewhere here. But this is the terminal in which most of Iran's oil is loaded up to ships. But the Straits of Hormuz is this one. And the issue here is, although they say this is 30 kilometers wide, the shipping channel is only 3 kilometers. So it's very similar to the Park Strait, if any of you have gone there, that although there's about 20 kilometers, it's all shallow, there is sand, etc. You can't send, there's only narrow channel through which you can, larger ships can travel. So this is the geography of the situation. And what they are doing is they are putting a choke point. So they are telling that unless you pay us, we won't allow you to go. It's 2 million euros or $2 million. Or if you try to go, we'll try to shoot you. And what happens is most of the ships have insurance. So the insurer is saying that I'm not going to cover insurance. You better stay put. So ships can't go in, ships can't come out. And this shows you the flow of ships. This has also been updated. So typically there were about 40 to 50 ships a day crossing, and now it has come to a handful. So they are allowing ships from Pakistan flag, some Indians, some Chinese, but majority of the ships are not being allowed. And it is not only that you can't have oil tankers, you have, I will show you, fertilizer and things getting in also. And this shows you that the issue with the air traffic. Now, the left is what was just before the conflict. And any of you who have traveled to the West, if you're looking at the TV monitor, you can see that you fly over Iran, the Zagreb mountains. Even a Sri Lankan airline flight that goes to London, it generally skirts Iran and goes. Now, after the conflict, it's on the right that none of the flights are going here. And what happened is one corridor is going through Azerbaijan. Now, Azerbaijan, the north, you see, in Iran, it is said that only 50% of the people, they have 92 million people, are Persian. The rest, at the south here, you have Arabs, and this side, which is near Pakistan, they have Balochistan. So there is Balochistan it's a province of Pakistan, and there is a Balochistan province in Iran. They are like the same people. The same thing with Kurdistan, that there is the Kurds, that it was a country, but when after World War I, when they drew up all these boundaries, that you had some Kurds in Iraq, you had some Kurds in Syria, you had some Kurds in Turkey, and you have some Kurds in Iran. And then at the bottom here, you have Iranians who are Arabs. So it's a complicated, geography, and also they were one people, but what the Americans and the Israelis are trying to do is to divide them and trying to get them to fight within each other. So coming back to Azerbaijan is a close ally of Iran, but they shot some missiles here into the airport. So what they were trying to do is there is only like 100-mile corridor here for these planes to go, because most of the Western carriers cannot go to Russia. Because after the Ukraine-Russian war, most of the Western European countries, their planes cannot fly through Russian airspace. And if you look at the boundaries of Russia, it comes right here. So there's a lot of buts and ifs and complexities that are going on. Right? Now, this shows you a more zoomed thing. This is a bit dated, but not changed much. And this is a more updated thing, again from the economies, that shows for all the different airports relative to what was there before the conflict, what kind of traffic is going. So Qatar is really frozen. Saudi seems to have like come back, but Kuwait is zero, and Emirates. So there is the Dubai, and there's very little difference to Abu Dhabi. They're about 35% of what they were prior to the conflict. So how have global markets reacted? And these show you, the day before the conflict. I normalized everything, and there's a whole bunch of indices. Now, if you look at countries like Malaysia, they have hardly moved because Malaysia is a net exporter of oil. This is the stock market indices. But Korea, etc., which is highly dependent on Middle Eastern oil, they've got hammered basically. Because one is that the market also had an extremely good year last year. And coming into this year, there was a very strong rally because of Samsung and Hynix semiconductors, which is like something like some 40% of the total index, the two stocks, because they've had they're going to get impacted very, very badly. South Korea also has huge petrochemical industry. A lot of aviation fuel, all of that is refined in South Korea. So we come to energy. Now, if you look at crude oil, you have these fractional columns, distillation columns. So what happens is that crude oil has a combination of many, many byproducts. And what happens in a distillation column is that you start heating, and they all have different boiling points. So right at the top, you get LPG gas, and then you get naphtha, and then you get kerosene, then you get petrol, and then you get kerosene, and then you get diesel, and then you have heavy oil and residual oil, and you get lots of other things that come. Right? Now, I was told by somebody that even the price of Panadol will have to go up 50% because a lot of the active ingredients and also all the packaging material. So very soon there's going to be a shortage of packing material because all of this packing material is made from petrochemicals. Right? Now, we are seeing the first reaction in the energy markets. But there are so many byproducts that come out that all those, and generally people carry much more larger stocks of those things. But the longer that this continues, and the thing with the petrochemicals is that inside the Gulf, there are very large petrochemical complexes like Saudi basic industries. And I think in Abu Dhabi and in Iran, there are very large petrochemical. So what's going to happen is that you are going to have a shortage of raw materials that go into plastic products, polythene, PET bottles, things that you can't even conceive are going to get impacted. Because if your critical resource is lacking, I mean, even if you want to make soft drinks or juices, overnight you can't go and pack it in bottles. There's just not enough bottle capacity. And even in Sri Lanka, I think the Piramal glass factory they were redoing the furnace. I don't know whether they have finished it. So you can't ramp up like that easily. From ice cream containers, so many things. And you'll have a significant increase in prices. So bitumen for roads, this is just a graphic that I found on the internet, but there are so many things, including, so let me show you this. Now, this shows you the price between the key raw materials like WTI, Brent, which is crude oil. Now, Brent also is not relevant to Sri Lanka because this Brent is Brent oil is not sea oil. Our matrix is Dubai, Oman, those oils. Those oils are higher because the shortage is higher there, right? Now, these benchmarks is above which other distillated products. All these prices are for a barrel, right? So the densities are slightly different, but the difference between the barrel price and the underlying benchmark is called a crack spread, right? So there is a petrol crack spread, kerosene crack spread, diesel crack spread. Now, what is happening here is that Brent today, I don't know what the price today is, like 105 or 110 or something, but diesel is at 220 and petrol is like 130. So the way we priced in Sri Lanka was that, petrol was always more expensive than diesel because it is not that petrol is more expensive at the refinery. Diesel is much more expensive in the refinery, but we tax them differently. And it has always been perceived that petrol is the rich man's fuel and diesel is the poor man's fuel, which is completely wrong. That may have been correct 30 years ago, 40 years ago, but with almost 4.5 million motorcycles, or maybe even 1 million trishaws. So roughly, I had done the math some time ago. 1/3 of petrol consumption is going to two-wheelers, 1/3 is going to three-wheelers, and the 1/3 is going to four-wheelers. And diesel basically only about 12 or 13% is going to to buses, but 2% goes to railways. The rest is all going into trucking and industries, etc. Now, your problem is that the diesel has gone ballistic because there are refineries that are inside the Gulf, and a lot of the diesel refineries are in China and in South Korea, etc. They don't have the raw material, right? So now you have a real problem that I call it when prices lie, crises follow. The case of fuel prices. So the question is about, we have a quota system. And today at lunch, I was discussing with some family members that apparently they are arresting people. They're arresting people. So if you have a tank of diesel, or you have it in a can and above a certain quota, etc., they're arresting. I don't have the details, etc. But my argument is that shouldn't you just allow prices, which are the scarcity value of resource, to reflect their true value, and you go away from all these quotas, etc.? Because invariably, if you don't allow prices to play their true role, you will get distortions in the marketplace. And let me explain that with a graphic example. When they put a 15-liter quota on trishaws, so the treasure driver said, look, I can't make my ends meet by using the trishaw on 15 liters for a week. The trishaw charge doubled. It's not that the fuel charge doubled, the trishaw charge doubled. Because what the driver said is, I have a scarce resource, which is fuel, and I cannot meet my costs. The supply of trishaw availability has come down. Therefore, the price doubled. So what happened is, the trishaw driver earning has remained the same. He is working 50% less, right? And the consumer is paying for that. So you had a huge surplus transfer to the trishaw driver. And this is where Adam Smith in 1776, when he wrote the Wealth of Nations, he very well articulated the role that prices play. And if you go and try to use other mechanisms like quota systems, etc., invariably you are going to create distortions, right? So this is what the prices should be. Now, prices jump all over the place. So what I'm showing you today may not be valid tomorrow because these prices are so volatile. But we are selling diesel at 200 rupees less than the price it should be at. because the diesel crack is more than $100 a barrel. So this formula, this analysis computes what the cost should be. Now, lots of people get caught up about a fuel pricing formula, etc. Actually, when I dug in to the legislation, etc., there is no regulator in Sri Lanka to control prices. And the legislation comes from a 1961 act called the Ceylon Petroleum Corporation Act. Right? Now, we have non-state actors now because CPC has 58% market share. The other three, IOC, Sinopec, and unpack, have together 42. IOC has about 23. The others have 9 and 9. As per the agreement, which is not in the public domain, but what they have told me is they have the liberty to set their own prices. It's just that CPC has a 58% market share and they have to follow it because the CPC chairman also said that, look, the other guys can not sell or they can stock out and we then have a bigger loss because everybody will come to us. Right? Now, what is happening is that the way our fuel pricing formula works or the fuel change, we change it every month. Now, always prices should start impacting how people respond in future, right? What we do is we go and adjust the price at the end of the month. So whatever the cost is today, we only adjust it in. So what our fellows have done now is they are going to adjust the price on 1st May. So in May, if the conflict even is over, you are going to pay for under recovery in April. And what the government has said is, I'm going to give a subsidy of 100 rupees per litre of diesel and 20 rupees per litre of petrol to the oil companies. And the balance, you can raise the price. Right? So just to give you this thing, roughly about 180 million litres of petrol and diesel a month. So if you're giving a subsidy of 100 rupees a litre, that's about 18 billion a month. And if you're giving 20 on petrol, that's about 3.6 billion a month. The total assumer payment per month is only about 14 or 15 billion total. So it's just so bizarre, and I'll show you. This is diesel and this is petrol. Here it shows you like 60 rupees. So they're going to give a subsidy of 20 and the rest will have to be recovered from May. It makes no sense to do it this way because ideally what you want to have is demand destruction. You want demand destruction. You want higher prices to either incentivize on the supply side substitutes, or from the demand side, you want reduction, right? So it's far better for the prices to do heavy lifting than try to do this. Now, at least they are sending the prices, not like 2022 where they just sat there and waited, right? But I wish more when I put my economic policy cap on, that the price transmission was faster. So we spend about 15% of our current account flows in fuel. And interestingly, we also have fairly big fuel exports. And if you're wondering what on earth is the fuel exports that we do, the bunkering, which we basically put into ships, and the aviation fuel, which we put into aircrafts, those are considered exports. Now, those are all at market prices. There is no distortion there. Now, I mentioned about the 180 liters, etc. It changes. But what you can see here is I don't have January and February data. But last year, you can see how when the economy has improved, how the demand is increasing. Both diesel and petrol, more so petrol. And you could see the traffic also, and a whole bunch of new vehicles also came. That, the demand is very high. And this kind of shows you that it's about 16% of current account outflows. That is all. This is not only imports, all current account outflows, including services, etc. So it's a large item, right? So you have crude oil, you have petroleum products, and you have coal. And our refinery can only produce about 25% of what we want, the balance. And the problem with the refinery is they've run out of crude oil. So because it's an 80-year-old refinery or 70 years old refinery, it produces more bunk. It's something called a furnace oil, which is heavy diesel, and it produces naphtha. Both of that are used in power generation. Now, CEB's fuel was from our own refinery, and I will show you what will happen if you have to replace furnace oil and naphtha with diesel. So this question about the formula, that, oh, you have to adhere to the formula, it is not so. Because in the case of CPC, say take super diesel, they are pricing at 443. But Sinopec is pricing at 572. Because that is closer to, and there's hardly any price difference between super diesel and normal diesel at the refinery. It's just the octane, slightly different, right? But this shows you the 572 is a more realistic price. Right? And if you look at our prices relative to our South Asian neighbors, they are also dilly-dallying, changing prices. Right? India, of course, has huge refineries. It's a net exporter of refined products because of Reliance, etc. So I mentioned about that crack margin. So it's like the Indian companies, which are all state-owned except for Reliance, they are giving away that huge refinery profit to the people. Right? That is why they are not, and they are buying Russian crude, which is at a lower price. In the case of Sri Lanka, we don't have those refinery profits. And very soon, those refinery profits are also going to go away because we don't have crude. Okay. So we can't afford to give it cheaper. Now comes the World Bank had done an analysis, and it showed that if you subsidize the 70% of the richest 30% of households get 70% of the subsidy. So if you are going to do these policies and say that I want to help the poor people because they are going to find it very difficult, it is not a good idea to do it through price adjustments. It is better to use something like the Aswasuma, which we have now, which we didn't have previously, to just give the poor people cash so that let the prices reflect whatever the market prices are, and you top them up so that they can afford their basic sustenance. But there is no need to basically subsidize people like myself who will probably not change our behavior, but it will then cost me in terms of my wealth if I want to consume at the same rate. It's much better to allow prices to do the coordination in the economy than try to intervene. Now, this was this World Bank study. And what they showed is the 10 deciles. And look at the right-hand side. The top 10% will get 30% of the benefit. Right? And the next guys will get about 16, 17, and the next guy 13, 14. So you add this up, and then you kind of get who gets the benefit. So then you come to electricity. Now, if you're given a trade-off between power cuts or high prices, I would have liked to do a poll, but it seems that a thing is not working. I would any day prefer higher prices because I can decide to switch off. So I live in an apartment building, and when the power goes, the lifts stop working. And there are a lot of old people there. So they can't climb the stairs. If your water pump stop working, you will have water in the toilets. But you can certainly switch off the ACs. You can do a lot of power management yourself, right? So it's always better to have higher prices than power cuts. Unfortunately, we don't tend to do that because then the adjustment will happen. And this shows you daily generation. Now, again, you can see here that in 2026, this year, not only is the power consumption gone up significantly in March relative to January, I'll give you two statistics. On a day, it's 60 gigawatt hours. In January, it was 52. Right? And it's significantly higher than 2025, all indicative of economic momentum, because I told you that in January and February, there was significant economic momentum. Right? Now, you have two problems. That during March, your consumption is something like, 15 to 16% more than it is in January, and it's significantly higher than earlier part of the year. Now, how are you generating this? This is your mix. So we have had clear days. Today there was a bit of rain, but all the days leading up to this, you had blue skies. This is generally a March phenomenon. So solar is kicking in big time, right? And some of the solar is all estimated because of all the rooftops. The thermal coal, luckily all the three plants are working. God forbid if one of those things conk, which happens quite frequently, you'll have to either get power cuts or you'll have to go into very, very expensive thermal. And then you have the hydro, because we are in the dry season, that the hydro generation has come down. Now, it is not as bad as previous years, because by this time you'll have droughts and things like that. Because of Ditwa, I'll show you, our reservoirs had a lot of water, right? And if you, this is the period I have taken about 2 years or 2.5 years, and we were blessed by no droughts. We had enormous amount of rain. So, our energy mix was very favorable because hydro is coming at 5 rupees. Solar, with all these things, it was given at a very generous rate, is about 30 rupees, right? Thermal coal is about 30 rupees, 35 rupees. Thermal oil is about 70, 80 rupees. And I'll show you at current diesel prices, it will be more than 200 rupees. Right. So this shows you the Ditwa thing, that this was about a week ago. Our reservoirs still had a lot of water in them. Right. So you can't let the water out immediately. But again, Ditwa did enormous damage, but it filled all the reservoirs. And there were subsequent rains also after that. Now, this is a typical generation curve of a day. This is last Thursday. Now, interestingly, the night peak happens at about 7 o'clock, right? But the day peak, right, and the load profile has changed, is actually happening at about 4:45. Now, if you look at this curve, if you want to understand what this curve is telling you, this gray part is what you call base load. And that is basically the coal power plants. It's about 900, but it is only producing about 700 megawatts, right? These peaks and this thing here is an estimated solar generation. So they use irradiance meters, and using that, they know how many solar plants are fixed, because there is no way to monitor in real time how much these things are producing, because you just export it into the grid. Right? So what they can see is the other stuff where my mouse pointer is going, that is the residual that gets produced. Now, only solar plants about 10 megawatts, they have real-time telemetry, that they have electricity meters that you can monitor in real time how much they're producing. All the other electricity meters, they can read, but it is read in the end of the period, right? So it is an accumulator, and then you know how many total units, but on a real-time basis, you can't monitor. Right. So this is an estimate, but this is your classic duck curve, that we have so much of solar because of the very generous tariffs. Everybody went and put it on their roof, and there are a lot of ground mounted ones that are less than 10 megawatts. So that's all this light gray. And this shows you basically the solar, the bigger plants. And then these two peaks, which is the evening peak and the morning peak, is met by major hydro, which is the maroon, and the pink is the thermal. Right. Now, the issue here is in the PUCSL submissions by CB, which they have released 2 days or 3 days before they increase the price. The thermal is costed at about 60 or 70, because it's on inputs given in February, before all this happened. The diesel is at about 105. And in the dispatch, they were not going to use the diesel plants. If you're wondering what these diesel plants are, there is this big one called Subadanavi, which is near Karavallapiti, and there's another one also. I can't remember the name. All the other, the Kalanitis AES combined cycle and all, they are all using fuel oil. Right? Now, I told you that they're getting it from CPC. They can buy it in the international market also, but it's not going to be cheap. Now, if those things, the diesel was estimated at about 105 rupees a unit, when the unit price of diesel was 270 rupees. Now, if the diesel price is going to go to 600 rupees, or even if they are going to give a subsidy, now already the bulk diesel, they're telling 450 rupees or something today I saw. You are going to have a significantly higher cost of electricity. right? Significantly higher. Because in this price change, they only increased by 11%. The CB asked for 13%, they increased by, because the way the price setting is, they have something called the bulk supply account. And because there was a surplus last year, during that first quarter, they're giving it back to the consumer. And again, it's very bad pricing, because you want pricing to be real time. It's telling you there's a shortage, weather has changed, there's more demand, basically. Conserve. We go adjusting 1 year later, basically, depending on whether it rained and all. So you are doing a cost recovery, but the price signaling function is totally eroded. Right. So now what is happening here is basically, this is what the load curve looks like. On a weekend, etc., it comes down. Now, this is this recent revision. Now, this is so ridiculous that in the domestic users, that if you take, it's 85 rupees, right? Some people are paying 8 rupees, 5 rupees. The high users are paying 85 rupees. If you are in time of use, during the peak, you're paying 90. And if you look at the other tariffs that they revised, now in the daytime, the industrial tariff is at 16 rupees. The hotel tariff is at 16 rupees. Both of these put together consume about 33% of the total energy consumption. And general purpose is about 43 rupees. So general purpose, which is again about 30%, is 3 times what hotel and industry pays, right? So my argument is electricity is electricity. Why you are having different tariffs for different people? We don't have that for petrol. We don't say that, trishaws will get it at one price and motorcycles will get it at another price. So, you have such a jumble system that the recent tariff revision is based on an average cost, because the thing with electricity is different times of every day the costs are different. And different times of the day also costs are different, because you have different plants are operating. But let's take an average. This is based on an average of 30 rupees. And if my scenario, you ran out of crude oil, and you don't have naphtha and furnace oil, and you need to generate using diesel, the price is going to be 45 rupees. Right? And in one quarter, that loss is about 60 billion. Right? So if you are going to have a loss like this, they'll try to recover it next year for the second quarter. So the question is, we need to have the right price signals going in, and there is a possibility of some kind of surcharge that might be put, because this is what the PUCSL says. Right? I know that I've been speaking for a while. So let me talk about, there's a lot of other things that I can come. Going into this crisis, the reserve accumulation was very good. The central bank in the first 2 months bought $700 million. Right? Now, obviously, March is not the same, because we have seen the overnight liquidity coming down, which means that they are selling dollars. Right? Let me go into two other very quick things. It's about tourism and remittances, right? 35% of the tourist traffic into Sri Lanka comes through the Gulf. These are the Gulf carriers who bring people. Now, March is a good month for tourism. April is a shoulder month. So we lost March, right? We lost March. We are going to lose April also. May and June are terrible months. I mean, it starts raining here and it's a low season. So it's not a big hit, right? And this shows you the port of embarkation before they come to Sri Lanka. These are all statistics. These are all for 2025. The next is remittances. The first 2 months, remittances are very strong. And this is where the remittances come from. That 70% of remittances come from the Middle East. Now, this doesn't give you 70% because some of the remittances are shown as US and UK, but they have a footnote saying that there might be apps or Western Union, etc., that when you look at the origin, that it is getting routed through some third country, but the origins is like 70% Middle East. Now, I was told today that in many Middle Eastern countries, some people are working 3 days and they're getting paid for 3 days. right? So you are now going to see a drop in remittances, which means that 1 in 6 households that are getting remittances, whose spending is 20 to 30% higher than non-remittance households, their demand, their ability to spend is going to go down. So you are going to see a contraction in demand. And that will reduce the demand for imports. Right? So two things, you got to allow prices to go through. That itself will kill demand because people can't afford. Second is the inflows, both from tourism that go into everybody working in the tourism industry, remittances, all are going to drop. And when those things drop, basically those households have less income, firms have less income, spending will come down. Spending both for consumption and investment, both will come down, right? So, and the few last ones is about 1 million people in the Middle East. And tea. I'm from a company that exports tea. Something like 43% goes to the Middle East. And I am not involved as part of the company in the tea, but my brother is. And one sign which is very, very mysterious is that if the demand is coming down, the price of tea should be coming down at the auction. But thus far, that has not happened. So obviously, the tea is being shipped on a long circuitous route. What cannot go into the Middle East, it may be going to other ports like in Oman, like in UAE, which are outside the Persian Gulf. And it can be taken by land, or it could be taken to the Mediterranean ports, and through Syria, etc., it's been taken. So because of the nature that it is a solid, you have much more flexibility than if it was a gas and a liquid. Gas is extremely difficult because you need dedicated terminals. And in the case of a liquid, there is a little bit more flexibility, but solids are much easier because you can take it over land. Of course, the cost will increase. The manufacture of urea, which is one of the fertilizer inputs, needs hydrogen. So urea needs ammonia, and ammonia is nitrogen and hydrogen. Hydrogen comes out of natural gas, right? Because natural gas is methane, right? So methane is carbon and hydrogen. And Qatar is a big manufacturer of ammonia. And many of those Middle Eastern countries, as I said, they have big petrochemical complexes, they have big metals, because aluminium requires a lot of energy, and there is a lot of fertilizer. So something like 30 to 35% of fertilizer, urea basically is produced in the Gulf. Now they can't get that out, right? And two things, fertilizer prices have gone up and food prices have gone up, right? Because already the markets have started reacting. Now, this crisis has been going on for 5 weeks. Now, we may be running off inventories, right? But the longer that it prolongs, the physical markets are going to suffer. And in the case of Sri Lanka, our next yellow planting season will come in about 2 months when the rains come, right? So not only us, the Indian subcontinent, it's a lot of the Asian countries are very, very badly exposed. So it is on that note that I want to say that we are facing an enormous economic contraction. I don't think you're going to have negative contraction, but the growth that we were expecting of 4%, 4.5% will probably come down during the second quarter and the third quarter. And one last thing that you would probably not even think about. By the way, this is the weather. I track it January, February. These are the rainfalls. You can see how great the weather was in the previous years. Let's look at the hill country where most of the rain comes. So the green was last year, right? We had very good rains. And this year, this brown, we are starting, it's a drier period, right? So the weather has held up. You can see these extensive rains that came. Right? That's what filled up our reservoirs. So we were lucky that Ditwa came, although it did a lot of damage. And one last this thing, you won't believe this. Medium term, what is our single biggest problem? You won't even think about it. Sri Lanka has a serious problem of babies. We have a baby problem in Sri Lanka. And I just got the 2025 figures 2 days ago. Just to give you a context, in 2010, we produced 360,000 babies. In 2019, that had dropped to 320,000. Last year, it was 214,000 babies. So look at the dramatic collapse in the birth rate. I was expecting that 2025 will turn up. It didn't. It went down marginally. Right? And I plotted the grade 1 admissions in the public schools. So 2025 census tells you like 2019. That difference is some data error, some private schools, etc. Now just imagine that this is the people who went to school in 2025 were born in 2019. Just imagine what will happen in 6 years' time. And what's going to happen is that because there's such a dramatic drop in the birth rate, that there will be a whole section of the population that is 1/3 less. And that will last for the next 30, 40, 50 years. So currently, I mean, jokes aside, I actually was trying to see whether the birth control market in the last few years has been very, very high, because you can see here that the marriage rate has also been coming down. Actually, there was an uptick, right? And, how come there are no babies? And as I said, everything there's demand. And if there were less babies, you probably have much higher demand for birth control products. But going forward, you will have less nappies, less eau de cologne, less stationery. Everything is going to start contracting. And that will then, everything that, graduation parties, everything is going to come less. So, as I said, jokes apart, we need a lot more babies. So on that, Siva, I will stop. I have taken about an hour, although your guidance was about 45 minutes, and I'll open it up to questions.
Sure. Thanks very much, Murtaza. That was a very insightful presentation. Really appreciate you covering not just the historical context of the Middle Eastern countries, the crisis, the backdrop to the current events, but also you have very kindly covered, some of the implications and also the statistics that, both JB and Advocata kind of, puts together to kind of give us a bit more, not necessarily a qualitative view of the current events, but also more of a quantitative view in terms of, how things have evolved. So we do have quite a few questions from the audience. I request, from our audience to continue submitting any other questions that they may have. We may try and cover as many as we can. So the first one I wanted to try and, ask you was, to begin with, could you kind of help us understand what is really driving this current Middle Eastern crisis beyond the headlines, and why global markets are reacting so strongly? So I think the point that the person who sent us this question wanted to try and understand is this purely or merely a political conflict or an energy market issue, or is it some sort of a play on broader strategic global power? So it's just something that they would like to try and get your perspective on.
Yeah. So that's my opinion, right? I'm not an expert on this. But having listened to all the analysis, the narrative is that Iran poses an existential threat to Israel. That is not true. That's simply not true. Netanyahu politically was facing issues. Right. So it was a convenient way to distract. As you know, there are investigations against him. He has an election that is coming. He might not win. All of this, history rhymes. Is somewhat familiar in Sri Lanka. We went through all this kind of stuff. So this is this whole narrative that is an existential threat. And today, if you listen to President Trump's speech, I got up in the morning and 6:30, 9 o'clock America time, I was listening to him. I mean, all the things that they are saying is just not realistic, right? So it is purely politically convenient for these two leaders, for their own agenda they created. Although in Israel, 80% popularity for this war, right? But for them, the way it is framed, like it happened in Sri Lanka, you can frame. We lived through the conflict things. And if you frame it in a certain nationalistic way, people also behave very differently. They didn't consult anybody. And they bought this on. And you can see the Europeans are saying you can't fly on us, etc. So I don't think they all expected this is going to be a short war. They didn't expect it to last long. And now they are trying to get out of this. But they have a huge problem because now Iran basically is holding the keys to the conflict because they've just blocked that thing. And the economic ramifications are extremely dire. And what people don't seem to understand is America is okay because they produce their own oil, etc. But it's a global market, the prices are going. Asian countries are in serious, serious trouble, including India and even Sri Lanka. Because look at what has happened in Philippines, look at what has happened in Thailand, look at what happened in Bangladesh. I mean, the Indian subcom, India represents 1/6 of humanity, right? The Chinese are, they have this thing, fertilizer, LP gas. Lucky for us because of all the Trump antics, we have basically gone and contracted with one company who gets 88% of the LP gas from the US, 12% from West Africa. So if you remember the last time when the riots broke out, it started with LPG gas. Luckily, this time around, so far, that we have LPG gas, but they were supposed to increase the prices. They haven't increased. They had to increase 200-300 rupees. LP gas, they haven't increased, but it's not too bad the increase. It's supposed to be about 10 or 15% increase they have to do. So the ramifications to us, Siva, is far more serious than say it is to an average American citizen.
Understood. So I'll take the second question, which is quite interesting, actually. So we did actually speak in general around the industry sectors and also the countries that are going to be impacted, especially the subcontinent. So this is rather an interesting question in the context where I think what's being posed is which industries and countries are likely to gain from this volatile situation. So it's a rather contrarian perspective.
So any country that is an energy exporter, I showed you the stock market. No, see Malaysia, which is an exporter, energy exporter, the stock market has not gone down. Most other countries, the stock markets have come down, right? So anybody who is having the products that were coming out of this Middle East, uh, and the world market prices have gone up. Now, just to give you an example, Siva, the United States produces 14 million barrels of oil a day, right? WTI is now hovering at about 95. Prior to this crisis, it was 65, right? So you do the maths, 14 million barrels, $30 more. So 140 into 3 is something like 425
Dollars a day,
million dollars a
extra
day.
income.
So that's $13 billion a month, right? And of course, America is a huge economy, but then you do the maths there, it's about $150 billion of additional income. Of course, one analysis they said is that what it is going to do in America is it's creating winners and losers between states because some states like Texas and New Mexico are energy exporters, while some states are like New York and the
Florida.
eastern side, they're deficit. So there is a wealth transfer inside America, but it's still waiting inside America. So there are fewer countries, even like Australia, Canada, which are big energy. Australia has gas, and they have permanently damaged the gas in Qatar. All those mineral exporters are massively benefiting.
Understood. So this is rather, I think it's kind of in addition to what you kind of mentioned earlier, which is when the prices lie, the crisis tend to follow. So I think the question that's been raised is pretty much on that same theme, where should Sri Lanka move more decisively toward fuel being sold at market prices to consumers, even in a difficult environment like this? And they've kind of gotten two added parts to this question. So one is shielding consumers fiscally sustainable? And would market pricing improve discipline and efficiency?
So unequivocally, yes, 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 yes. But the thing is, I'm in a minority. And if I go to explain this to people, basically they really have a very strong emotional reaction. They say, what about the people? But you got to understand how income is distributed in Sri Lanka. That 1% of the top people, the richest people, control 40% of the wealth. It's not very different to many other countries. If you look at income, the income is 51%. Now we have a household income and expenditure survey, which has got, they do it every 5 years, it's delayed. But it will come out soon, right? They have like a diary for like 1 year, you have to keep it. Second half of the year, we will. So after all the crises, we will get new data. But I don't think it would be very different to what it has been for the last 30, 40, 50 years, which is that the top 10% get 36% of income, the top 20% get 51%. The bottom 10% get 1.6% of income, and the bottom 20% get 4.6. That's income, right? So if the top 20% get 51% of income, the top 20% accounts for like 46% of expenditure because they can save more, right? They don't need to spend everything. So all the expenditure, as the World Bank showed, using household and income expenditure data, that it is the top 30% of the households that get 70% of the benefit, right? So you got to allow the price transmission to happen. Now this question has been about prices. I showed about electricity. Something like 3% of electricity consumption is hotels, right? So hotels, they protested and they got classified at the same tariff as industrial. Now in the daytime, their tariff is 50 rupees. And on the time of use, the general tariff is like 41 rupees. So if you go to a wedding hall and you have your wedding in a hotel reception, it will cost them 50 rupees. But if you go to a wedding hall, it will cost 41 rupees. So not only, different enterprises, depending on their classification, are paying different prices. Rich people who can afford to pay much higher prices are getting subsidized. So they are not cutting expenditure, basically. So you are distorting. And this fear that, what about the poor people, etc. Poor people by nature are poor. So they have less income, they have less expenditure. Unlike previously, you can now through Aswasuma, there is 1.7 million to 2 million people on Aswasuma. And there is something called the social registry. Every single person who is getting a benefit is on that social registry. It's on the internet. You have to put like district, Grama Niladari thing, and you'll get the whole list. Right? I have gone and looked at my area and see who is on that list. So we have a mechanism to compensate these people and say, okay, I'll give you some top up. I'll give you some top up so that you are at the bottom, you're looked after. Right? But prices do miracle things, the coordination, the allocation problem, LED bulbs versus CFL bulbs versus incandescent bulbs. You shift behavior, you make rational decisions. And it is the power of prices that will make the market system work. But for so many reasons, as Advocata, this is our 10th year. Of course, I'm today speaking as the CEO of JB Securities, but I'm also heavily involved in the think tank called Advocata. This has been a non-stop fight that allow prices to reflect scarcity value. But you have such a myth busting and you have such a challenge in Sri Lanka that people confuse affordability with allocation.
Understood. And on that particular point that you were mentioning about, having, market prices determine supply and demand and also investor or rather consumer behavior. So there's this question that just popped up just now. Isn't it the responsibility of policymakers and the governments to also look at the vulnerable communities? I do completely appreciate and understand the point that you mentioned about a smaller proportion consuming the biggest quantity of all these, and they do have greater disposable income. However, this is just playing the devil's advocate from a poorer person's perspective. Is there something that the government need to act, to protect their interests.
Yeah. So as I gave the maths, we roughly about 170 million liters of diesel and 170 million liters of petrol are getting consumed a month, right? Now, if you are going to sell diesel at 100 rupees less, that means the subsidy bill for the government is 17 billion. Okay. And then you are going to increase the price in May, 1st of May, for the damage you're doing in April. So it's politics. I mean, now Rudu is coming. They don't want to lose popularity, all of that. Same story that we have always heard. And for petrol, 20 rupees, they're going to give subsidy. Rest you correct. So that, as I said, is 3.6 billion. No, 163.2 billion. And for the diesel, which is where the big damage is. Now, there is a fear that inflation will go up, right? But inflation is inflation expectations. The price indices will definitely go up. But is it persistent, right? Inflation is not too much money chasing too few goods. So your target is 5%. The governor and the monetary board was getting blasted basically for not achieving that target of 5%. Leading into this crisis, we were 1.6. Last month, it came to 2%. So as the governor said, we have enough room. They couldn't get it up to 5%. This will automatically get you up to 5%. But this is not inflationary because it is not persistent. So the vulnerable definitely are going to get impacted. Vegetable prices, everything is going to go up. But we have this aswasuma. So as I said, the total safety net social transfer in Sri Lanka through this aswasuma is 180 billion a year. 180 divided by 12 is about 15 billion. This thing, the diesel subsidy alone basically is 118 billion. So and what happens is that if you don't do that, the VAT collection would have gone up by about 20 billion. With higher prices, no? So you could have taken some of that and used it for this. And then you would have also preserved foreign exchange, etc., because you want a demand contract. Now, I'm told that the rationing system has already done about 20% contraction. But the thing is that you are taking away the flexibility. Like the example I said, that they're trying to arrest people who have cans. You don't need to do all those things, just allow the prices to take care of it.
Agreed. Agreed. So you did touch, quite a bit on the GDP growth, how if this, the situation, if it kind of, prolongs for a little longer, then there may not be necessarily a contraction in the negative per se, but at least we will not particularly have the growth that we were previously expecting. And also, since you just, touched on the inflationary expectations, so prior to the crisis, we were well below the inflationary target. But now, given, let's say this crisis kind of, prolongs for a few weeks or months, do you expect us to overshoot or rather reach and overshoot the inflationary target in this year or early next year? Is that the kind of, market expectation? And also what would your views be on that?
So, one moment, I can. These are the slides I didn't show. This is 2025 GDP figures. We are still marginally below what we were in 2018 in real terms, right? Adjusted for inflation. And if you look at how we got here, these are the sectors that contributed above average growth. Now, this blue line is what is called gross value added. The red line is GDP. What is the difference? The difference is that in the GDP calculation, it's gross value added per sector plus taxes on production and subsidies. So what has happened is that a significant contributor was taxes minus subsidies to GDP. And this is the delta, how much more? And it is adjusted for the deflator. So a big contributor of this was vehicles. right? Taxation. Because the government estimated 450 billion they will collect, and they ended up collecting 900 billion. Now the thing is that if I was to go here, I hope I have it here, that okay, it's not in this, but roughly we do about at the peak we were doing $300 million for vehicle imports. In February, that is down to 200. Right? So that alone, the growth will come down because they were collecting about 150% as taxes of the import value, roughly. So from 300, we are down to 200 already. And now going forward, it will come down even more. Right? So that the role that taxes played. And then, when you have vehicles that are sold, you have insurance, financing, other things, all the multipliers, all will come down. Now, the question about inflation. The direct impact from diesel and petrol is only about 1.5%. Already some little has already come in March for these current increases. The indirect effect, because if the diesel price goes up, transportation, all of that, they have a target of 5% plus or minus 2. So the upper bound is 7. Right? So if you allow diesel prices to go at 600, and the transmission happens quickly, the prices, people start changing, you will immediately have inflation going to about 5%. You'll have a big jump in food inflation, etc. But then it will start contracting demand. Demand will get contracted, right? So, you'll equilibrate and you don't have to excessively worried, because the inflation index, that it has to be persistent. Inflation expectations have to get, everybody knows that this is like a 1 month, 2 months thing, right? Now, if it extends for more than that, the whole world economic GDP is going to contract. So I would say that we went through a lot of strife, and the reason why we came back, the IMF had 2 meetings in Sri Lanka. Kristalina Georgieva, I think somebody, managing director, IMF has come here in the 1970s. She came here. Before that, 1 year before, the first managing director, Geeta Gopinath and Krishna Srinivasan, the head of the Asia Pacific, came. Sri Lanka did a lot of right things. And they all came here to, encourage us and say to keep going the path. It was because the prices did the heavy lifting. When RW got appointed, basically, immediately they allowed all the prices to go up. You remember the petrol price was like 450 or something. It did all the correction immediately. The currency went to 370. And in the grey market, it was going at 500. Then it came back to 285 or something. And now it has gone to 314. So it's the prices that did the magic of prices, did the adjustment in the economy. So when you have a shock like this, you should allow the prices. The problem is, what do you do with the vulnerable? It's 50% of the population. And my argument is, we have the Aswasuma. We have the Aswasuma. Use it, use it, use it. There is a reluctance. There's a reluctance, and people have all sorts of things. Even, I have been involved with all politicians across the aisle. They just don't seem to understand.
Agree. So I appreciate, we don't really have the crystal ball in terms of predicting what may play out in the next few weeks or months ahead, especially in relation to this Middle Eastern crisis. But some of our, the listeners who have dialed in today, they're quite keen to understand the implications on interest rates, products like government bonds and stock market. How, yes, we did have an initial shock. We are off the all-time highs on the stock market. Rates have, at least on the T-bills, bonds, they have inched up a tiny bit, but not necessarily to, levels that were seen previously. But from your perspective, what are the ramifications / implications in the near term, especially given the uncertainty?
Yeah. So let me share my thing. So this shows you the overnight liquidity. The overnight liquidity, for those who are not sure what on earth it is, the banks have to keep something called the SRR, statutory reserve ratio. So any balance greater than that gets aggregated across all the participants. And that is what the overnight liquidity is. So there was some period of time when it hit like 400 billion, which was very high. And one of the main reasons is what determines this liquidity. So one is when the central bank buys dollars, that there's excess amount of dollars in the economy, they give the person selling rupees. And unless you sterilize the intervention, the amount of rupees in the system increases. The second is currency in circulation. So I don't have it here, but I can show you that there is a rapid increase over the last 3 years. There has been a rapid increase in currency in circulation, and now it is hit about 1.6 trillion. Generally, leading up to Aurudu, you will have a run up in currency in circulation because of more transactions happening, more shopping, Ganudenu, all this stuff that happens, right? Now, this year, there is an interesting critical thing that happened yesterday, which is that the VAT threshold that was set at 60 million a year came down to 36 million. So there are a lot more people who now have to register for VAT. And what I construe that when you look at the increase in currency in circulation over the years, that there is more and more avoidance happening to avoid VAT. Because if you look at the increase in currency in circulation and increase in 5,000 rupee notes, the increase in 5,000 rupee notes is significantly higher than the increase in cash in circulation, percentage increase. So when banks go and take more cash because their customers are asking, that reduces liquidity. So that is also playing in, right? The third thing is if the central bank gets coupons because they are sitting on 2.5 trillion of government securities, when the government pays them the coupon interest, that is cash going out of the system. Then when the banks get involved in swaps, where the banks give the central bank dollars and the central bank gives them rupees, liquidity goes up. If it so this liquidity at the margin has a big impact on short-term interest rates. But what's happening is the call money rate is below the 775. I don't know what happened today, but certainly last few days or certainly last week, it is because if the policy overnight policy rate is 775, the call money rate was like 7.6. So the bank internal lending market is not short. There is a risk off trade happening because we have about 0.9% of our total supply of government securities owned by foreigners. And after seeing many months of inflows, they suddenly reversed in the last 2 to 3 weeks. And they are reversing because they can see that these countries that are deficit of energy, that they are going to have a much higher burden, energy burden or import burden, and therefore they fear that the currency will depreciate, they are pulling out. And when they pull out, and when they sell, then the interest rates are going up. So we have seen a significant movement, something like 50, 60 basis point movement in the government security market, right? So at the margin, it is impacting. And even if you see the overnight policy, I mean, the PLR, that has been slowly inching up. So there are number of factors that risk of that they're not willing to, I mean, they're cautious. Everybody is cautious. But at the same time, when you look at credit demand, which was growing at some phenomenal rate, who is going to spend? And the spend is both discretionary consumption, and investment. I mean, everybody's going to go wait and see. In this environment, you're not going to spend, right? And in terms of consumption, if people's basically income gets impacted, they may draw down their savings or they may borrow and spend. But I would think that credit demand is going to slow. Now, what will happen is that if there is more foreign exchange that starts flowing out, because it's a market determined rate, and the what do you call the central bank has to start selling dollars basically, which means that the liquidity will start coming down because when they sell dollars, the person buying the dollars is giving them rupees. And that amount is going to start coming down. And that will then push up interest rates in the short term, etc. I am not expecting a major thing. I'm not expecting a policy rate reversal, an increase, because they are at 775. Inflation is still at 2%, long way to go, but credit demand will come down.
So interestingly, thanks for that very insightful sort of explanation around, credit growth, inflationary expectations, etc. So the question I had was, obviously you did mention and highlight currently investors are probably in a wait and see slash risk off sort of mindset. And once the demand, in a way, once it starts slowing down, is this going to naturally have an impact on our stock market, the valuations? We've had a fairly decent run over the last 18 to 24 months. Is that a kind of a sign for some sort of a pullback in the near term? I mean, it has come off the recent, or rather the all-time highs, but what would your take on the stock markets in particular?
So stock market, basically, I might get into trouble again. Once I was asked to come and speak on national TV, and in my not so good Sinhalese, I said, look, the stock market is the members of the Colombo Golf Club and the Colombo Swimming Club. I've been in this for like 30 years, and it's a very concentrated number of people. If you look at all the statistics, about 1,000 people. I mean, there is a greater participation, but on most days it's like 10 or 20 people who really drive the trading for the day. It's a very concentrated number of people. Now, we've had 90 billion of credit outstanding. That's a figure that you can get. So 75 billion is margin credit and 15 billion is broker credit. Now, I haven't got the statistics for February. This is January. So initially, the initial reaction of downward revision of prices were distressed sales of margin. There's also one or two of these large sovereign wealth funds who I think are selling out of the market. They have been selling out for a while. So all that is impacting the prices. Now, thus far, the reaction is not based on that there will be a significant contraction in economic activity. It's more tactical and more, induced by margin sales and people trying to get a better deal. But if this continues, obviously earnings are going to get hit, and which means that then multiples are going to look expensive. And now take, for example, today, the turnover had come down significantly. When a turnover comes down, it's either that the prices have to go up because nobody's selling, or prices have to go down because nobody's buying. And if you give the trade-off between the two, I think the prices have to go down from this point onwards. But, when you consider a macroeconomic framework that, you have independent central bank, you have less fiscal profligacy. We are still in an IMF program till the second quarter of next year. It's highly unlikely that you will have a fiscal blowout, etc. So the long-term outlook for Sri Lankan equities is positive relative to other asset classes. But as I showed you, that we have serious structural issues, including no babies. Nobody is talking about the baby crisis. Just think about it. You have one-third less babies. You used to have 320,000 babies born in 2019. You have now 214,000 babies. So, and this has been going on for the last 4 or 5 years. So, your population has to drive demand, right? Unless we dramatically transform this, your structure, you're going to become like Japan. Your population is contracting because, by the way, the death rate has gone up, So more people are dying, and a net rate for 2025 is only 1.8 births per thousand. And when you take the number of people who are leaving Sri Lanka for foreign employment, then obviously the population is contracting. Now, if those people start coming back here, then it goes other way, but they're coming here without jobs. And then the way our economy works, the productivity growth, the investment, everything, you got to do the structural reform. So coming out of this crisis, we have to accelerate reform. See, the government is putting out policies, right? Energy, electricity, good. But the changes are taken till 2030. Cess, they're going to remove the cess, which was highly protectionist state. But most of the removals are coming in 2029, 2030. We can't afford to wait. We need to do it today, not in 2029 or 2030.
Agreed. So thanks for that. That was very informative. So you did mention about, IMF, especially how impressed the IMF, the directors are, or rather have been, with the progress that we've made over the last few years, especially around, making sure we kind of, get back to market prices and pricing determine our behavior, supply, demand, etc. So this is quite an interesting question. I decided I'll pick this one up and, raise this one up with you. In a worsening Middle Eastern crisis or rather external environment, should Sri Lanka revisit aspects of its IMF program or seek greater flexibility? What are your thoughts on that?
Before I answer that, and I will answer it, that you asked a question about the interest rate, that government security. Here they are selling. So all this time, from around about September, the amount of holdings of government security to September 2024 for the last 18 months, it has been increasing. And recently there was a big increase. And now see, they're selling. So I don't know what happened this week. But this is one of the reasons why the liquidity is going down and it's also impacting the currency. This is amongst others. There are other forces also at play. And then you asked about government security market. See, 1 month ago, the yield curve was something like this, and see, it has jumped. Right? It's not a major jump because the market is not clearing. There's not a lot of transactions. And with regard to the fiscal position, this was last year, which was a blowout year. You have a primary balance, which was 1.1 trillion. This is 3.8% of GDP. The previous highest we had ever done was 0.8% of GDP. And since independence, except for 5 years where we had a primary balance surplus, the highest was 0.8%. Last year, basically, we did 3.8%. So fiscally, we have been doing very, very well. And one reason is that for the first time, the tax was higher than what was budgeted. Because no lesser thing in something that I am familiar with, Sri Lankan people's love affair with cars. It's that rich class, the top 5%. So they contributed handsomely to this 900 billion in taxes that were collected. And in terms of private sector credit, you can see that these vertical bars is the credit extension in a particular month, but January has come down. But anyway, January is low. So we'll wait for February, my feeling is. And I have another chart that shows you where the credit has gone. But before I come to that, here you can see an uptick in interest rates. All the interest rates are moving up. But it's not a major movement. Now, two places where credit has gone is basically gold, either through the finance companies or the banks have been lending to finance companies or cars. And gold was 5,300. Today it's 4,600, 4,500. It went down to 4,100. It's going all over the place. So, a lot of that value, the ability to lend more is probably going to contract. Now, the question was asked about the IMF. In the key criteria, they have three things. One is the primary balance. So that is the revenue minus expenditure without interest. And tax revenue probably is going to get hit because even fuel taxes is a major contributor to government revenue. And they will collect tax revenue because until this, you're paying taxes on 31st March profit. So income taxes should be okay. But most of the taxes are collected on VAT, etc. If the economy slows, that will come down. And they have to meet certain primary balance targets. And how that will be met is the capital expenditure will be cut. So until about November or this thing, they were spending 50% of the budgeted amount in capital expenditure. I think the budget was something like 1.3 trillion and we were spending like 650 billion or something. That was the run rate. But suddenly in November and December, especially in December, there were arrears payments. And then it went up to about 900 billion, the capital expenditure. So in order to reach the fiscal targets, the easiest thing to cut is the capital expenditure. So if they are unable to achieve the primary balance targets, they'll cut the capital expenditure. The second indicator is inflation. They have to keep inflation within that 5%. As I said, that there could be a lower probability of an overshoot, and the overshoot comes above 7%, but lower probability. The net international reserve target was they had to buy more than $2 billion this year. That's not going to happen. That's not going to happen. And I'm pretty sure the IMF will revise that.
Thanks for that, Murtaza. So I do have a couple more questions. Hope that is okay.
Yeah.
So this is rather interesting one. So what is one misconception many people may have about this conflict and its economic consequences?
Mm-hmm. So misconception may be basically that it's not going to impact us. This is happening in Iran. And, we see this on the headlines, but they may not be able to connect the ramifications to us because still people have inventory, they're running on inventory, the government is not revising the prices, etc. It will hit them when the price revisions happen, and that's delayed. So the role of politicians, of course, the president is giving speeches, etc., but they're still sugarcoating it. They are not coming and saying, look, hunker down, we have these issues, etc. So the full impact of how vulnerable we are is, I don't think it has hit home. It has not hit home. Like a guy like me, kind of, I'm trying to understand better, and therefore I'm trying to articulate here how that this is like a mother of all crises that Sri Lanka is facing. But most people know something is wrong, but they don't understand the severity. And having engaged with various politicians, etc., they're waiting in La La Land.
So that's quite an interesting take on the current situation, and also how maybe in a way people are rather oblivious and they're not quite sure what the implications are. This is again another interesting question that I just saw come up right now. What is one indicator that you personally monitor every day to judge whether this crisis is worsening or getting better?
Um, there is no one indicator because oil price, etc. There's a lot of speculation also going on. But I was listening to CNBC last evening, and there is this professor, Jeremy Siegel. So he's a very famous professor at Wharton. He wrote this book for Stocks for the Long Term. He's an American Jew, etc. What he said was that Benjamin Netanyahu at the Knesset in Hebrew had said that Iran no longer poses an existential threat to Israel. And he said that. So all indications were that when Trump was going to speak today morning, that he would talk about an exit plan. But he's giving confusing signals. So if I was to answer that question, I would be looking at markets, because markets basically kind of aggregate collective information. But I think even the markets cannot figure out which way this is going. So I'm afraid that I don't have any single indicator.
Understood. And I kind of completely agree with that perspective as well, because usually market is a kind of, realistic indicator in terms of giving us a view of how things are developing. But in the current context, what we see is just, great amount of volatility where, it's kind of risk on, risk off sort of, behavior, which kind of,
Siva, there was,
yes,
you must be familiar with these poly markets where people are betting on outcomes. And there
yes,
is so much of
yes,
insider trading activity going on that,
true,
people are, I mean, I have been in the capital markets. I understand what insider trading is. I mean, it's rampant in Sri Lanka, but look at what's going on in the US. Like the guys are
exactly,
10 minutes before the statement comes out, they're making bets on the market. So even the poly market, now they have been losing out. Basically, they're stopping some of these bets because that's a place you look to get an indication. But I don't think the markets are being able to, in this particular case, give us indication. Nobody knows.
true. And also what we also seem to hear these days is that, maybe two individuals within the same sort of, institution end up giving two conflicting sort of messaging. So which doesn't really help the markets, and also it doesn't certainly help an average investor in this current climate. So I would like to just ask one question before we wrap up the Q&A and the session. Uh, What is the one message that you would like to say to the Sri Lankan businesses and investors currently listening in? And what is that message and why?
So the message is basically that even if this crisis finishes tomorrow, the long-term implications are not going to finish immediately. There was somebody who was from Goldman Sachs last evening, again on CNBC. What he said is that now they have run down the oil inventories, the strategic reserves, etc. So what they will do is, even if this conflict ends, now you have permanent damage to supply, right? That has to be restored. But these inventories have to be rebuilt. So not only are you having demand that is going to come from for current consumption, but you have to rebuild the inventories. So what they had said was that you will have a $10 premium for that, and then a $5 risk premium, etc. So things are not going to go back to where it came from. Certainly not this year, even if you assume that the conflict is going to end soon. So whatever people had budgeted, now most Sri Lankan companies work on a financial year starting this thing. So the budgeting cycle would have started somewhere in February, etc. You'll have to revisit all of those budgets. And you probably have to significantly downgrade your expectations. And somebody had asked Siva about that energy transition, etc. You see, the Chinese always are very long thinkers, no? So the Chinese stocks, etc., they are not reacting so adversely. It's not because they have got the diversification. Now, the thing is that even if you want to do this diversification, right, during the crisis, they paid some ridiculously high tariffs for solar, which was like a license to print money, and the solar panel prices all came down. And that is why we have now excess amount of solar. So if you are an investor in solar, on most weekends, they're telling you to switch off curtailment. So most about 15% you're losing out because any sunny Sunday, any sunny holidays like yesterday, switch off. Sunday, switch off. Now tomorrow, Good Friday, maybe it's not a mercantile holiday, but the thing is that the incentives were given, etc. It was built. Now, if you want to do more transition, you will have to do batteries, etc. Right? But it will take time. You can't do this overnight. You have to have a multi-generation and even electric cars, etc., where the Chinese and in many of these things, you have to change the policy. Here, basically, our tax policy is all distortionary, size of the motor, and it's all concocted. So if you want to do the transition, you got to put the policies in place, but the transition cannot happen immediately. It will take 2, 3, 4. So, for example, if you want to do pump storage in near Aranayaka, near Kegol, it's not where the earth slip happens, some other place they have identified. So we consume 52, now we are doing 60,000 megawatts, right, a day. And the pump storage is for 600 megawatts, so 1%, but you need it only in the night, this thing. That thing will cost $600 million, $1 million per megawatt hour. And it will take you like 3-4 years to go build a dam. So these things cannot be done immediately, but it cannot be delayed also. And we should do these things.
So I believe, like, just to summarize, I believe this is, it is the kind of the perfect moment for us to turn this sort of crisis into an opportunity for us to look and strategically plan for times ahead, because the world where we live in essentially is essentially a place where, every few years we are quite susceptible, quite vulnerable to external shocks. So thinking and planning ahead more strategically for the future ahead is always the prudent way of going about things.
Yeah. And what worked in the past, like, when we had a crisis, we exported all our people because the Middle East was doing well. I don't think our remittances and the departure to foreign employment, where 80% go to the Middle East, with what has happened there, their economies are going to suffer. They were booming, but there will be some reconstruction. But I feel that they will have certain economic issues. And not only will there be less people who will be able to go, but some of the people there might come back.
Understood. So those are the questions that we have had for today. So Murtaza, thank you very much for your valuable insights. It has been a pleasure, having you with us, and I'm sure our audience would have appreciated, not just listening to the presentation and some of the statistical inputs that you provided, but also, you kindly taking our time to answer some of the questions that were raised by, our clients, our staff members, and also, some of the other members who have tuned in. So I'd like to, thank on behalf of DFCC, and I'd also like to thank all the, listeners who have joined in. So thank you very much, and have a good evening, everyone, and also have a good, lovely, long weekend as well. Thank you very much.